Welcome back. Today we're moving to a topic that's somewhat close to my heart. We're going to be looking at investing in the crypto commodity and the blockchain space. To repeat my disclosure from the first session, my day job does involve advising people on their investments, but this session is not about that. I'm really not here to tell you what to put your money into, and nothing that I say here should be taken as direct investment advice. The idea here is to just pass knowledge, so keep that in mind. This is not about telling you what kind of investments you should be doing in this session. And when you begin considering investing, when you consider putting money into assets of any kind, whether it's property or gold or equity or securities, you need to understand a bunch of things about it. You need to understand what the underlying value of the asset is. You need to understand the market within which it's operating. You need to understand how things normally operate, what time spans they function under, and why people put money into it. And you shouldn't be doing this just because somebody told you to, or because a newspaper article said Bitcoin is now worth more than gold. You need to be looking at what is referred to as the fundamental value of an asset. With multiple other assets, like for example the US dollar, the value is that it's something which is a currency for a global economy. For gold, it's a precious metal. For something like Bitcoin and some other currencies, these are ways of transferring value. With something like Zcash or Monero, it could be that it's pitching anonymity. And quantifying this value, this fundamental value, that can be a little difficult. And very often the price which you see in the market is much more than just the fundamental value. For example, right now in the US, a Bitcoin could be worth $2,200. At the same point in India, it's about 25% higher. It's not that the fundamental value has changed, but the market scarcity, the number of people who are operating in that sphere is different, and that does affect price. And even going beyond fundamental trading, you could be looking at some of the statistical markers in the market. How many people want to buy at a certain price point, what the volume is, how the graph looks. All these statistical models together are what is referred to as technical analysis. And combining your fundamentals and your technicals, you can build something like a sophisticated investment approach, a thesis of your own. And both of these together constitute what is called speculative trading. This is where you're trying to predict the price at some point in the future. And if you're correct in your assumption, you stand to make a lot of money. You can exploit whatever the market is missing out on. If you're wrong, you will be losing all your money. The common adage with any sort of investing is that you should only be putting in as much money as you are willing to lose. Keeping all of this in mind, if you want to get started with investing in cryptos, the first step is to set up an account on one of the exchanges in your country. And you'll probably be asked a bunch of questions related to your KYC details. Fill all that in, submit the information, and then transfer money into it, buy your asset. That's the first step. And trading in cryptos is pretty much the same as trading with traditional stocks and equities, in that you buy at a price you think it's right at, you sell at a price when you think it's gone up in value. And the same kind of advice which applies there also applies here. You need to be reading the market properly. You need to be understanding the market. One thing which I normally suggest to people is get a notebook. Write down across a month or across a week all the trades you think you want to do, and tabulate your profits, your losses, all the fees and charges you'll encounter, and find out how it looks to you over time. Whether this is something which looks profitable, whether this looks like something you might want to do. Now, let's say you've decided to start this kind of crypto investing. There are some ways of even hedging your bets. Even if you inherently believe in the long-term potential of Bitcoin or Ethereum or whatever it is, you can still make sure that when there is market volatility, you can sort of protect yourself from losses. One thing which some people do is they build a basket of funds so that your risk is diversified across multiple assets. If you believe that whenever BTC falls, a bunch of other assets may go up in price, it would make sense to form a portfolio comprising all of this. Some people exploit what is known as an arbitrage gap. I mentioned the 25% premium earlier between the US and the Indian markets. This arbitrage gap means that if you can complete a full trade, you stand to gain that much percentage profits. And this is just making sure that you are looking at an existing inefficiency and exploiting it. This is not speculative trading. This is not trying to guess the future. And if you have never really done trading yourself before, here's my advice for getting started. Basically, don't do it. find somebody with experience managing funds in the sector and invest through them. Because if you jump into this market without really understanding it, without any preparation, you are going to get burned. The main reason that cryptocurrencies and crypto investing has been so alluring is that the capacity, the potential for profits is huge. In these last 2 months, some people have made double their initial investments, and because of leveraging opportunities where you borrow margin on capital, I've seen people make small fortunes. It's possible to even open a futures contract or an option and thereby get maybe even 100 times your base capital as borrowed margin or leverage. And while this may seem like a great idea, even a 1% movement in price can completely wipe you out. I've seen people, friends, lose money by playing with futures trading. And going beyond futures, there are quite a few sophisticated financial instruments which people have come up, since this is a digital quantity, since this is something which you can just work with online and program with. Some of the things I've noticed are potential options for investing. You could look at options like cloud mining, where you pay a small price premium at the beginning and you get periodic payouts whenever your mining equipment gets a Bitcoin. There are index funds, which are baskets of multiple funds and they track an index so that your risk is diversified. There are decentralized investment funds. I've been talking about blockchain hedge funds. There's been a lot of activity where people automatically take your money, deposit it, manage their portfolio and return it after a lock-in period. You also have what are referred to as ICOs, initial coin offerings, which is basically blockchain talk for IPOs. These are ways for you to get initial shares in blockchain assets or in blockchain companies. You also have what are called OTC or over-the-counter lending funds, which is typically people providing liquidity for short-term in markets where there is low volume. And beyond all this, you also have a bunch of pyramid and Ponzi schemes, which have basically just painted themselves over in a Bitcoin flavor in order to separate you from your money. So you need to do your due diligence on any of these options and decide what could work for you. I also want to touch upon another aspect which comes up when you're thinking about investing. And this is true for all forms of investing, honestly. You will be under a lot of stress. This can very quickly, very easily become a full-time job where you're looking at charts 24/7. Your anxiety levels are going to skyrocket. Facing the fact that cryptos aren't some get-rich-quick scheme, the kind of questions you should be asking are not really what is the ROI on Bitcoin or what is the best coin to put money into, but your question should be along the lines of, there is this space and I understand some of the technology in it. So with my understanding, what is the future value of this? And when I understand this tech, when I understand the market, when I see where it could be evolving, what kind of investing decision should I be making? It's not as simple as which one coin do I just throw all my money into. I've spent so much time advocating caution and restraint. And I know that might seem weird because, here's a guy whose business is literally doing this and it sounds like he's telling you not to. I'm not telling you not to. I'm not telling you shouldn't do it. But don't do it because the newspaper said you should, or because your friend said you should, or because the driver in your last Uber trip said you should. Honestly, we've gotten to the point where everybody and his dog is now trying to buy these tulips. So don't be one of those people. You have the capacity to be smarter than that. So take your time making your decision. Go to coinmarketcap.com, look at the top, let's say 10, 15 cryptocurrencies. Figure out which of these makes sense to you, which of these has an underlying technology you can identify with or believe in or use, and figure out whether their philosophy agrees with your own and form a sophisticated investment thesis. You can do a bunch of things with this, and once you're prepared, it's not as bad as just gambling away with any one form of investing. We are definitely at a defining point in history where, as far as investing in this space goes, in the last 30 days, it's been phenomenal. If you look at, for example, the NASDAQ, it's gone up by about 2.5 to 3%. The Sensex has gone up by about 4.5%. In these same 30 days, Bitcoin has gone up 80%. And there are clients of mine who made even more than that. There are some people who invested in Ethereum, which has gone up 140%. So there is a lot of money to be made in this space, which is why we are seeing proper funds forming inside it. There are so many of these micro funds which offer to manage your money, to invest it. And there is definitely money being made, but it's usually at the cost of the uneducated investors who are just jumping in without any caution. So do your due diligence and don't be one of those people. Over the course of this session, filled with numerous warnings, I've covered the fundamental and the technical aspects of assets, of investing. I've spoken about how both should play a part in forming your hypothesis, how you should be forming your own investment philosophy, not just copying it, not blindly following the market. I also touched upon multiple safety hedges and multiple derivative options in which you could be investing. As always, if you want help managing your investments, if you want to work with us on the specific value that you can derive from this, I'm happy to do this over private messages because this requires an entire conversation. There isn't a one-size-fits-all response to a question like this. We can begin a private discussion, we can see what could suit your requirements and work from there. Beyond that, whatever general questions you might have about the market, about some of the things I've discussed, please leave your comments and questions below. I'll get to them shortly. And once again, thank you so much for watching.